All right, so this is a good segue into the conclusion of the discussion here. And also I want to thank you for being willing to let me ask you the bonus question that we'll do at the end here. So let's, at the end of the day, it's investors that are watching this program and trying to figure out how to position and whatnot. So if we can kind of conclude on your general outlook for the markets, I think you just made a really good long-term case for exposure to hard assets. But if I can kind of wrap up what I've heard from you to date, it sounds like you think that the Fed's going to try to tighten for the near term, and don't underestimate them and their ability to do that, at least until something breaks. And therefore, the probability of lower financial asset prices ahead in the short term, probably not bad. You got to be ready to pivot if and when the Fed does pivot. But don't let me put words in your mouth. I mean, how would you be sort of encouraging people to consider navigating this current interim period that we're in?
So for the most part, I focus on being somewhat diversified, where I want good equities, I want good real estate, I want commodity exposure, hard monies, and then some cash for rebalancing and volatility management. And I will tilt that in different directions based on some macro factors. And so starting in December of last year, when it became clear that central banks were going to, do a round of pushback against inflation, that they were waking up to the fact that it was not transitory, I warned my clients about becoming more defensive, wanted to have, decent amounts of cash, focusing on defensive value like pipelines and healthcare stocks, things like that. And the recent update I've added is that I also add a little bit of longer duration treasury bonds, which is unusual for me. I as someone with generally more inflationary outlook, I've generally avoided that space this whole cycle. I added a small amount of those as a hedge, basically to defend against the possibility of a continued economic slowdown, yield curve inversion, that sort of thing. But the bulk of my portfolio remains focused on high quality long-term assets. So oil producers, energy pipelines, other commodity producers, just hard monies like gold, silver, Bitcoin, and just things that produce cash flow, things that have utility, and very cautious around things that are not profitable, and very cautious around things that would face margin pressure in a stagflationary environment.
Okay, great answer. In some ways, I'll say cash is king. It's what I hear you saying, which is either cash itself right now or things that have positive cash flows, profitability. Those will fare better in the type of environment that we're in right now. Okay, two quick questions because you mentioned them. One, the precious metals. They've had kind of a funky year. On the plus side, they are one of the few assets that has held their own, right? I think gold is still up for the year versus the general market indices, which are down pretty substantially, and the cryptos as well, down pretty hard. But I think a lot of people are scratching their heads and saying, God, I would have thought it would have done so much better than it's done. And it did briefly touch an all-time high back in March, but it's drifted down since, and it's kind of been languishing since then. Any particular opinion on gold right now?
I would have expected it to probably be over 2,000. So it is a little bit lower than I would have guessed by this point. During economic growth periods, so rising PMI environments, let's call them, generally investors prefer to be in other assets like equities or riskier assets, and gold tends to do well compared to other risk assets in declining PMI environments, which is what we're in now. So as you pointed out, it's held up better than most equities have year to date, for example, and it's also held up better than long duration bonds, which have sold off pretty sharply. And so I think it's starting to do its job here in 2022. As a defensive store of value, and I think that there's probably going to be a sovereign bid in the years ahead, because I think that there's an increasing realization among sovereigns that holding the bulk of their reserves in another country's liabilities comes with more counterparty risk than they thought, and so I think that we're going to see basically probably a greater share of gold exposure in sovereigns. But I think right now the market's rather diluted, right? So for example, People can invest in gold, they can invest in silver, they can invest in Bitcoin, they can go into like all these other cryptos that they went into. And I think that a lot of that has to be cleared out, right? So I think that there are a handful of things that are good money. I would classify gold, silver, and Bitcoin in that. But I think the long tail, these other things that a lot of retail investors poured money into are malinvestments. And so I think that as that kind of melts away, investors go back to what actually has value. And I think that over the next 5 years, I think gold is pretty well positioned to take advantage of a stagflation environment where stocks aren't going straight up, and margin pressures being felt by a lot of these companies, and that sovereigns are kind of realigning their portfolios a little bit more towards diversification and real assets.
Okay. All right. Yeah. And I mean, being flat for this year, flat's the new up in a market like this, right? So
Yeah.
I shouldn't paint it as a disappointment. It's actually, as you said, store of value. That's exactly the role it's playing right now. And, for a long time, the precious metals holders have been dreaming of the day where, the average investor balance sheet says, you know what, I'm actually just going to move a percentage or two from these riskier assets now into gold, for diversification, or because they're not performing as well and gold's hanging in there. And it doesn't require a lot of money, a lot of capital moving into this space for gold and silver prices to move pretty big, because they're relatively small markets compared to the stock market or to the bond market. And I see you nodding while I'm saying this, so I won't beat this horse too dead. Okay, real quick, Bitcoin. I noticed that when you sort of refer to the crypto space, you're really saying Bitcoin and you're not saying, crypto versus at large. I don't want to put a lot of words in your mouth, and again, another big topic. I don't want to shortchange you here, because I'm sure you've got way more nuances that you'd like to express. But sort of in the wrap up here, what's your general perception of Bitcoin? And it sounds like you still hold it in your portfolio, so you've got some belief there.
So I'm structurally bullish on Bitcoin as a part of our portfolio. I think it has a good 5+ year runway ahead of it in terms of increased adoption. The reason I like it is because it's really, when you look at it, it's one of the only truly decentralized cryptocurrencies, meaning that there's no central entity that can make more Bitcoins or change how the code functions. It's highly distributed. It even makes multiple sacrifices in terms of other capabilities in order to remain basically as hard and as immutable and as decentralized as possible. And in the wake of that, you had thousands of other projects come along. Uh, you know, Most of them are not as decentralized as they claim to be. I've written a number of times. I've been pretty critical on Ethereum. I've been pretty critical on some of these other projects. And I think that, not every single project out there is bad, but I think that there's it's kind of like unregulated penny stocks, basically, except that some of them are worth tens of billions of dollars or more. And so I think that for the most part, I am not bullish on crypto, but I've been bullish on Bitcoin, and I've been bullish on stable coins as a technology, and specifically the fiat collateralized ones, not the algorithmic ones. And so, for example, that whole Terra Luna fiasco is one of the things I wrote about ahead of time and warned people about, because that, again, was in the bucket of just unsustainable things, malinvestments out there. And so I think that Bitcoin, as basically peer-to-peer encryption money, is a useful tool that people have now. And I think the market's going through the process of testing it, monetizing it. We're 13 years into that. It still has risks ahead of it. But I think if it gets past those risks, I think it'll continue to be a good investment. So I'm pretty bullish on that. But it's not something that, I think you want to have more exposure than your volatility tolerance or your level of research into that space.